Hey everybody, Economic Ninja here. I hope you're doing well. We're going to talk about markets today. We're going to do a little daily market update of why precious metals are getting so hammered today. Gold is down, silver is down. The markets are up, but they started down today. I've got a lot of data points for you guys. I'm going to talk about some historical trends. And for those of you in the precious metals sector, these are days that you should be thanking the Lord for and not getting stressed out about, because I think people take too small a picture of the past, of history. They don't understand the big picture. So we're going to talk about the big picture right now, right? So I got a lot of things to share with you, so stick with me. Here we go. We're going to share the screen, and we're going to show you today's markets right now. So the Dow Jones currently right now is up 235 points, but it was down 100 the last time I checked, about, not very long ago. So we're going to go through all of this stuff. So oil or bonds, sorry, the 10-year is still rising. I want people to understand that. The 10-year is still rising because people are afraid. You go, well, wait a minute, though. If the Dow Jones is up and all the other indices are up, why would the 10-year be up, right? People are still afraid. They're not sure of this market, and they shouldn't be, for good reason. So the 10-year is up, and the dollar index is also up today. If you see right here, the dollar index, move me out of here, is actually positive today, just a little bit, but we're at a 103.369 right now. And if you think about this right now, that means the dollar index is only strong because it is the stronger, what do I call it? The better smelling turd in the punch bowl, because all fiat currencies are crap and they're all falling simultaneously around the world. It's just the dollar is stronger against a basket of currencies. And remember, when we're talking about that basket of currencies, the weighting really is strongest to the euro. Okay, DXY is really tied to the euro. It is other currencies, but mainly the euro. Okay, the euro is not doing well. So we're going to do a little bit of a little history lesson. All right. First, I want you to remember this chart. This is the Fed funds rate when they started raising rates right at the end of 2015. I want to say it was December of 2015 to when it absolutely collapsed after when we had the whole lockdowns and COVID and all that kind of stuff. But right here is what I want you to focus on, is when it topped right around here, okay, in 2019, or sorry, it was the end of 2018. Oh, it was literally almost 3 years to the day. It was the end of 2015 to the end of 2018. Sorry, man. So if you look at right here, the Fed funds rate was sitting around 0.25%. And they first raised it up just 25 basis points. And then incrementally over the next couple of years, they raised it until they hit a top of 2.5%. Now, you guys have heard me talk about this a lot, but I want to go through this. In that amount of time, gold rose about $100 an ounce. If memory serves me right, it ran about, 7 or 8% up in this amount of time, okay? Because what was happening was, as interest rates were rising, investors were getting very concerned that there were problems in the economy, and there were. If you remember, this is when I sold my last home, and bought Bitcoin and silver, because this is, by the time this was ending, banks were not wanting to do business with each other. And it wasn't until September of 2019 when everything started to fall apart, okay? And remember, those time periods, they're long time periods. We need to take big pictures, all right? All right, now we're going to jump to a buddy of mine, Crypto Charts Joe. Joe's a buddy of mine. I really do like his work, and he sent this to me just a little while ago, about a few days ago, and it's entitled DXY US Dollar Index Monthly Chart, 3 High Pivots. Now, what he says here is, as you can see on the chart at the red arrows, we're hitting the high pivot zone, triple top zone for the third time. Also, we are very overextended up and over the 200 moving average red line, and price will always 100% of the time come back to that 20 moving average, the 20-day moving average. Sorry, the dollar will be pulling back. It's now just a matter of how far and down it will go. Now, when he's talking about this dollar index, remember, this is the dollar versus other currencies, okay? And when the dollar is strong, gold and silver are not. Now we're going to go here to the gold chart today. Remember, I showed you that the index is up slightly and that the 10-year is up really well too. And today you see gold getting hammered, $50 down, right? Down 2.6%. Silver, even worse, down 2.73%. And this is when you start thinking, oh my gosh, what was I doing buying precious metals? Okay. Now, these are the things that you should be excited about. Now, look at this right here. This is the headline that reads, gold slips towards 2.5-month lows as Fed rate hike looms. This is what they said also right before the last time the Fed raised rates. That was their big thing. On a gold down day, they try and jump on this kind of news and get you fearful. And they say, the Fed's going to raise rates, so that's why gold's down. And since, if you think about it, they're trying to inject this into your mind, since the Fed's going to keep raising rates, gold's just going to get hammered down more and more because people are going to want dollars. All right. Now, I want something else. We're going to stop sharing real quick for a second. I want you to understand something. The entire world is going off the dollar standard. It is very evident. It's all over the media. This started really in earnest back in August when Saudi Arabia inked that historic deal with Russia, and then Nigeria also put a deal together with Russia, saying that they were going to trade, they were going to look towards Russia for military hardware, military training, and protection, right? Then we started to see other countries fall in line. There's so many, it's hard to even go over this if I didn't have just a list, but just recently we saw Iran ink a deal with China for selling their oil to China in yuan, right? So the whole world is completely going off the dollar standard. You can't stop the slew of headlines. And right now, we're not doing anything about it. This is the first time in 50 years that the US government has not jumped into a country and stopped the sale of oil or commodities for anything outside of the dollar. Okay, this is absolutely historic. And these countries know they can get away with it right now with the current administration. Let's just be honest, okay? So the facts are the dollar is going down, and it's going down fast, right? Even though all the currencies are falling, and it looks like right now we have a little bit of perceived strength, paper prices of gold and silver are falling today. And I want you to understand, if you haven't been purchasing precious metals, you don't know what the market's like, especially if you have not been an investor in the last 10, 12 years, like myself. And I say that not to, boast, because I mean, a lot of people would say, that's probably the worst investment you've ever made, because the price of, let's say, silver is down in the last 10 years, right? Which that gets me super pumped, quite frankly, as I'm an investor, not a speculator. And then a lot of people would say that gold hasn't done what it should do because they're looking at a chart from 1980. What they don't realize is that gold and silver are monetary metals, are still perceived as that by most of the world. And those don't completely go parabolic until it is too late. All right. It sounds funny, but it's like trying to catch a falling knife, but in reverse. It's trying to grab a rocket as it's taking off in the launch pad and you're trying to jump and grab it. So let's jump back into the screen share. All right. So now, again, we see silver and gold popping off. Now let's go to my friend Joe's chart again, and we're going to talk about something else. So this is from Joe just a little while ago. Let's move me out of the way. All right. He's showing right here the DXY hourly chart now. This is the other day, okay? Now today it's popping a little bit. Is under its 20-day moving average and the 50-day moving average, and our low pivot support at the blue dash line looking more bearish by the hour. Let's go gold, silver, and BTC. Now, all of those right now, including Bitcoin, are all being suppressed, right? Why? Because people are running to the dollar, okay? They're running into safe haven assets like the dollar. And then, what's crazy right now, if you think about it, right now that 10-year bond is rising, right? Well, the only reason it would be rising is because people aren't diving totally into bonds, and people that need to raise money by selling 10-year bonds are having to raise the interest rate that they pay. So that's very, very interesting, right? Usually when people are diving into bonds, what happens to the yield? It drops, okay? So it says right here, Crypto Joe says right here, DXY, the beginning of the end, we take our near-term support at the low pivot zone. See the blue dash line right here. Now it is popped up a little bit above it, but not by much. The dollar is going much lower, and that's his call right now. And quite frankly, I believe that to be true as well. Now let's look at the big picture, okay? Because to a lot of people, $50 would be a big swing. But throughout history, $50 in the gold price is not a big swing. And we're going to talk about this specific point right here. All right. Now, everybody knows what happened right here. This is when the economy came down. This is now gold already was trending up. Remember when I told you at the end of 2019, which was right here, this is when everything started to get nutty with the banking sector, right where my little cursor is. The interbank lending rate had spiked to, I don't know, it's been so long now, I want to say 12%. That's a huge number. If you look back in history, 9/11 and the Lehman Brothers collapse, the interbank lending rate had spiked to around 10%. So 12% was astronomical, right? That hadn't been seen since really China had a lot of issues, their banking system, I want to say in like 2014, 2015. Anyway, sorry, I digress. And I don't have the information in front of me. But you can see right here, gold started to take off. It came back a little bit. It was sitting around 1,470 bucks, and it started on a tear. By the time everybody, and remember, this is when actual, let's see, right, March, right when about 1,650 bucks, gold took an absolute header. And it took as the market was shutting down, it took that header down to, what was it, about 1480, absolute massive crash. And if you see right here, these swings going up and down, and then wham, down, and it consolidated down here for about a week or so. Then it started to take off, right? Now, what had happened in this amount of time? Well, people were liquidating, markets were liquidating like crazy because all markets were in a free fall, right? Everything was fearful, everyone was scared, and they started to collapse. Now, as that gold, paper gold, took that absolute header because people were selling anything they could, stocks, they were selling everything to raise cash, right? Because of margin calls, things like that. Paper gold took a header, but physical did not, because the premiums exploded because everybody saw these smoking deals and rushed into physical and started buying up, especially people on the street that had stimulus checks. That was really exciting. Well, then from there, people would have thrown their hands up if they'd been in gold for just a little while and said, oh my gosh, just lost a ton of money. But they didn't, because look at where it went from 1,480, where it peaked over $2,000, right? Absolute terror. Now you look at this and coming down, you're like, oh, the market's doing better, gold's going down, people are going, what in the heck's going on? But that's not the story. You see, ever since then, we have seen a sustained rise in the price of premiums. It has absolutely blown my mind, quite frankly, how high premiums have gone. And that is not because all of the wholesalers, or I'm sorry, the resellers want to do that. As a matter of fact, if you were to go right now and resell your silver and gold, resellers online like Miles Franklin, SD Bullion, Atmex, all these large guys, they're paying over spot price to buy it from you. Why? It's because they're having a hard time and they're paying even more than that. So they're offering you over spot price to buy it so then they could sell it to somebody else. So that shows you how they're not trying to make money. They don't want to do that, but they're trying to grab it from wherever they can because it's so hard to get a hold of right now. Now, this is where we are right now. You can see this drop down in the price of gold. And I use gold as a bellwether because silver is more volatile than gold because it has so many more uses. That's why I like it over gold. Now, with this price right here, right below $1,900, let me ask you this, looking at this big picture and looking at the biggest picture from the economy, do you think that the economy is doing strong and that gold should be down? Or do you think right now, right here where we are right now, is a small blip on the road to up here? I want to make that very clear because I think it is a very important thing to tell people. Stop looking at the daily gyrations. Keep grinding. This is why dollar cost averaging is the way to go. Okay. Now, none of this is financial advice, right? Except for dollar cost averaging. That is probably the easiest way to minimize your risk, right? Some people get super excited and they jump all in to something because they believe the narrative or the fundamentals of an investment, and then something changes, the price goes down, and then they have no money to buy more and they freak out. Or they go, what was I thinking? I shouldn't have done this. Stop looking at the day-to-day, the minutia. Look at the big picture. You have to ask yourself this: where do you think the markets are going? Where do you think the economy is going? Do you believe that the Fed is going to be able to raise rates? I personally do not. Do I believe they're going to? Yes, I do. Do I believe that because they're raising rates and all interest rates are going to start rising, all of them, that people are not going to be able to afford to buy new homes, to buy new cars, to put anything on their credit card? No, I do not believe that. Do I believe they're going to put things on their credit card? Yes, because they're broke, but it's going to break the system. Now, it's only a matter of time. Now, these things do take a long time. And that's why I tell people, they're like, you know, people that have small minds go, well, look, you've been saying this for a long time. And I go, well, it's been happening for a long time. And I keep getting richer because my investments, inflation makes wealthy people wealthier. I want you to understand that, because wealthy people understand to own real assets, precious metals, land, like farmland, things, rental property that rents really good, right? Not those single places like these Airbnbs are going to get crushed in the future. Water, resources, right? So when inflation times come up, inflation makes poor people poorer and it makes rich people richer. Okay. So that's what you want to think. And every day you have an opportunity like this. And guys, I'll have links in the comments below, obviously, because you guys know that I'm big on precious metals and I do have some affiliate links. These are the days that you go, let me take advantage. Now, what's interesting is in the precious metals market, in the physical market, that's tough because you're paying these premiums that are high, right? So you're hoping that supply comes in, but sometimes it just doesn't. And it's just getting tighter and tighter, which quite frankly makes even more of a case to own physical precious metals in your possession, hidden away somewhere that no one's going to be able to find it, not in a safety deposit box. That's not a safe way to do it. So guys, I hope you got something from this. If you did, please do me a favor and hashtag silver, hashtag gold at the end of this video as a reminder to me that some people are watching this to the end, but also that you get those nuggets, because it just seems like as we talk about these things, the best ideas come at the end. So I really thank you guys for watching. Seriously, Ninja Nation is going to absolutely crush it in these days. I cannot wait. With that being said, guys, the Economic Ninja is out.